All right, so now we're recording, so 28th of March 2017. So what we're doing tonight is Module 2. I've actually, as I told you last week, I like to teach Module 3 after Module 1. I just think it aligns a lot better. And so tonight we will be doing in your book Module 2, which is the business management one. And probably the big difference from this unit compared to any other unit that we train, there isn't really sort of much legislation that we're referencing. Like there's no standards. There's sort of no tabbing of your book. So in my experience from the guys that I've trained who have gone through sort of in the last couple of months either an interview or a multiple choice, there's not as big an emphasis on the business management as there once was. So you still need to be able to show that you're competent in running your business. But for those guys, if you would have put your application in probably before the 30th of June, there probably would have been a business management plan that you would have had to have put in with your application. So for those guys who have done their application since the 30th of June, have realised that that's no longer part of it, as there seems to be a much bigger emphasis on basically being a builder and knowing how to build a building from start to finish, and knowing the legislation that legislates our contracts, our Building Act, and also our occupational health and safety. There's a lot more emphasis on that rather than you being having strong business skills. So you still want to be able to show those skills. And tonight, pretty much what I'll do, I'll just run through this PowerPoint, and once, like, this will be almost, or it is identical to actually what is in the question and answer in your book. So it just looks a lot better, obviously, rather than rolling through a PDF. So this is just, I suppose, a little bit visually better for you guys. And sorry, I didn't take you off mute there. So you're off mute now. So yeah, it's just probably visually better for you guys. So when you're trying to go through your workbook, if you're sitting there through your study buddy, these questions will be the same as what you'll see basically in your folder. So what I'll do, there will be some which I'll say, hey, listen, we definitely need to know these, and we'll highlight it either in your folder or you write it down. There'll be stuff in there like on insurances, GST, you know, about when you actually have to claim, like when you have to be registered for GST, I should say. And there'll be a little exercise at the end which I'll show you. It's more for your own skill set than what you'll be asked when you actually go in for your interview or for your multiple choice. And a lot of guys might not have had exposure to this, and it's about just keeping a spreadsheet of all your basically, I suppose, expenses. And then when we can align, because when we look back to what we did with our contracts in the last week or so, we would have noticed that we had our progress payments, where we had a deposit, we had a slab stage, we had a frame stage, and all these different stages throughout our building. And we can then see those percentages and see when we're going to be claiming on those. And then you can sort of outline basically your money coming in against your money going out. So you can see, okay, it's really critical that I finish this this frame and basically get it signed off by the end of the month, so then I can claim that stage because it's going to be worth, you know, $100,000. So then, because these are the bills that I've got, and that'll make a bit more sense when I show you some documents later on. It's just an Excel spreadsheet, and if you do actually like that business management side, I can actually send you an exercise to actually do. So depending how we go for time tonight, sometimes I actually do incorporate that into the session, but it's really one of those things whether or not you decide to do it. Most of the time the guys go, no, look, I'm good with my business, and they don't do it. But should you want to do that, by all means, we might have half an hour to 40 minutes at the end, and we can put it towards actually doing that spreadsheet if you like. But anyway, let's get tonight's one started. All right, so this here, the first question, as we see in our folders, is what do you need to think about before preparing a business plan? So for those guys, I'll read through these and then I'll give a bit of a description on what a business plan is, and that might, you know, basically make a bit more sense when we read these answers. So what do you need to think about it? So what is the purpose of preparing that plan? Also, you'd have a table of contents, just like when we open up our building code, you know, our legislation. There's always a table of contents that outlines basically which part of the business plan that you'd want to go to find out a certain element of it. The business identity. So obviously your business plan is going to include what our name is, what our brand is, our logo, the protection of any intellectual property that comes from creating that identity. So intellectual property, guys, is basically something I suppose like software and things like that that you might make up. It might even be your own estimating template that you've created in an Excel spreadsheet, something like that that you might want to protect because you spend a lot of time in creating that, and then having, a lot of people then start to duplicate it. If you have other people working for you and then they move on, you don't want them stealing all that stuff that you've put a lot of time and effort into. Also then what the philosophy of basically the business owner's basic beliefs are, your values and what you aspire to actually do. So as your business, what are you committed to doing? Are you going to chase that, that architectural sort of element of the market where, it's more the high end because you don't want to compete with Metricon and Carlisle and Simmons? Or do we want to do, renovations and extensions? Do we want to basically do knockdowns and do developments? So this here would basically have the philosophy of what your actual business is. A few other things, who our customers are going to try and target, the products and services that we're going to offer, and where the business will be located, the technology used within our business, and then the commitments to achieving our economic objectives, and the creation of a financial plan to help future finances and the company's projected financial position. So what happens, and we'll probably talk about this a little bit more in detail later on, but if you're wondering what basically a business plan is, you can, I know like the NAB do one, and you can just basically download it, and quite often it's used a lot of the time, I suppose, for investment purposes. So if you wanted to go to the bank and just think outside construction, but if you want to go outside the bank and you want to basically start up a restaurant, and you needed the money to obviously, you might be able to obtain the lease, but then you need to do the fit out for the kitchen, all the tables and chairs and everything else. So when you would need a loan from the NAB, they would say, okay, do up your business plan and basically put a case together that shows us why we should lend you our money. And that's basically when a business plan comes into play. So in construction, you might be trying to work with like a developer or have a financial backer. So as you might be working with somebody and go, hey, geez, I'd love to actually start our own developments. I'm sick of dealing with clients. And someone then might want to invest within your company, and they might want to see something like this. They go, okay, that's great. I've seen you on the tools, but what have you? If I'm going to pump a few $100,000 into your business and we're going to become partners, what's your philosophy of where you want to go? What do you actually own as far as assets and so on? And that's when we could be using a business plan. All right, so then it says, why would we need one? And a couple of things I just spoke about will be on here. So it says it's an integral part of the registration application process, but not so much anymore. So it said if you basically applied before the 30th of June, it would have been a big part of what your application was about. And a good business plan should assist the builder in defining the direction of the new business after registration is achieved. And even if you don't do a business plan, guys, it's a good idea to even set some goals and work out, okay, I'm going to be registered and this is what I want to do. And then, in 6 months, 12 months later, look back and see, actually, well, I was sort of pie in the sky, I was dreaming too big. Or secondly, I'm not where I wanted to be, what can I do to actually try and get there? So that's another good point of having a business plan. And here's just some figures that suggest that 80% of businesses do not exist after 5 years, and 80% of businesses do not have a business plan. So it obviously doesn't mean you've got a business plan you're going to succeed, but it's all about, sort of setting some goals and then sort of rejigging that and trying to think forward rather than, trying to chase our next dollar all the time of, geez, I haven't got any work on next month, let's just go and do some maintenance or whatever it would be. Something about trying to have a plan and work to that, and there's nothing wrong with changing that plan if it's not working. We'll talk about that a little bit later on. All right, so the business plan does improve the chance of survival, and as I spoke about before, about a selling tool to influence prospective partners, and the feasibility and profitability of the proposed business before committing to invest. And then we can also talk in there how issues will be addressed before the marketplace, clear guidelines for the operation of the business, and then the clear direction, maintaining focus and energy. So try not to get too sidetracked going, hey, this is what we basically said we were going to do. Let's not, try and pull down all these little decks and do little add-ons for a bit of money. We want to be developers, so that's where we want to put our focus into. All right, so what steps can be taken if your original business plan is deemed not to be working? So this is something to, for those, I don't want to go too much into guys who have studied, Cert 4s and diplomas, but when you actually study like business units, there's a thing in there that they call it a SWOT, or a SWOT analysis, which stands for strengths, weaknesses, opportunities, and threats. And even if you're not going to do a whole business plan, I think basically a SWOT is a good thing just to write down, in your diary and work out, okay, what are my strong points? What are my strengths? What are my weaknesses? Where's the opportunity in the market? And then where's the threat to my business if I do that? And to be honest, like I'm looking, the reason I'm actually putting my house on the market, guys, I'm actually moving to Queensland. And builder registration, we're going to do some stuff up in Queensland. And I'm from Queensland originally, and I was pretty keen to go back. So, yeah, I've sort of done my own little, like not a full business plan, but a little bit of a SWOT, and realised, okay, what are my strengths? What are my weaknesses? And I think by finding out your weaknesses, that's when you can go, okay, well, I need to outsource that. And not making this all about Adam, but I know that one of my sort of weaknesses as far as the builder registration side goes, I actually do the recruiting for builder registration as well. And for me personally, I know that's not a strength of mine. I'm not a salesperson, and so that's something that when we go to Queensland, I've identified that is actually a weakness of mine, and I'll probably try and employ someone on a contract basis to do the marketing and the sales side of it. So that could be something within your business. You might go, okay, well, look, I'm the great. I haven't met anyone yet who hasn't told me they're the greatest tradie. So you might go, hey, I'm awesome at this. I'm great at estimating, but how am I going to get people in the door? Am I going to use Facebook? Am I going to use Instagram? How am I going to promote myself? And that might be something that you realise is outside your skill set, and basically put some focus onto that. So back to this part here. So what steps can be done if our plan isn't working? So a contingency. So that's basically a backup can be developed to allow for the non-achievement of the original goals established. So that's saying, okay, I want to do this high-end residential market, but if I'm not succeeding, what am I going to do to basically, as my backup, because I see that's where the money is and that's where my skill set is, but what can I actually do whilst I'm getting that set up? It could be, doing smaller projects. It might be even just working as a subcontract for someone else as a foreman. So have a contingency there so that in 3 or 4 months' time, when we haven't got any work on, like, geez, what am I going to do? So try and have a contingency. And a plan can only work if it's followed. If the plan is followed by the business management and doesn't work, then it's poorly done and it should be revised as soon as possible. So there's nothing wrong with doing a business plan and then working out, going, hey, listen, what I've done isn't actually working. Let's basically do X, Y, Z, and let's rejig it and see if that's going to work. So there's no point in actually making that plan, going all of that effort if we don't follow it and give it a go, because that's what we put our time and effort into. And also, don't be basically scared of seeking the advice of experienced professionals. So, I know at the end of the day, everything costs money, but like the first business that I was involved in, and I said, I don't make this all about Adam, but just from my experiences, is when I was reasonably young, probably only about 24, my mother was in hospitality and we went halves in a cafe. And so I was basically halves in the cafe. We did a write-out for about 2 or 3 years, and then we decided we sort of want to go to that next level. And we actually basically sought the advice of a marketing professional, and just the small tweaks he made to the business, it was amazing the difference it had on the turnover and the profitability of the business. And I know that it's hospitality and it's not building construction, but seeking out that person who had done a lot of work within the industry, and I said it was amazing the difference it made to our turnover. I forget the figures now, but I remember Mother's Day was always the busiest day within the business. And I remember he said to us, what's your turnover on Mother's Day? And whatever it was back then, it was probably $2,500 to $3,000 for the day. And he said, how would you like it if every Saturday and Sunday became Mother's Day? And I thought, yeah, good on you, mate, whatever. And pretty much within 6 months, every Saturday and Sunday was similar to what our basically our Mother's Day were, which was our biggest day of the year. So by getting professionals, as it could be, even something to do with your estimating. You might find that estimating is not a skill of yours. Seek that advice of these professionals to basically help us, and it can only help our business. And that's going back to identifying what our strengths and weaknesses were, so that we're not falling down on something that's not our strongest skill set. All right. So what steps should be taken when preparing an annual budget? So this is something that you guys might be starting to think about this already, because we're all going to be getting licensed probably in the next couple of months. So you might have already started to have a look at it. Okay, what's my projected turnover? And is there any financial history of my business that I can sort of work towards that? So depending on your own situation, that might be sort of out of your realm so far to actually access any history. But just start to have a think about, okay, well, this is where I want to be, and what's my turnover going to be? Then we can start to think about overheads and stuff like that, and we'll talk about those later on. So when we're also preparing that budget, basically who the target market is and what type of building projects are going to be undertaken. And I've already mentioned that earlier, and we'll talk a little bit more later on about how, to sort of think about what your competitors do in actually targeting that target market. So I know that when I was in Queensland, we sort of, what we targeted was getting in with some architects, because that was where we were, was basically trying to go that high-end residential renovation market. And so we got in well with some architects, and what would happen, they would obviously, they would be engaged by the client, and then we knew then that we became, just 1 second, Ben. Basically, so we found that if we got in with that architect, they engaged the client, and they would then recommend us. But there would have been obviously a few other people who were on the books for the accountant, and basically then we knew we were only competing against, sort of 2 or 3 other quotes, and also too, you knew that the client was genuine. So that was, something that was our target market, trying to get in with those architects. And also it talks about there, when you are preparing that in your budget, by all means, if you feel you need the assistance of your bookkeeper and your accountant, that might be something that you need to do. Now, I've just got a question from Ben, and it just says that my voice is dropping in and out. Is that happening with anybody else, or is it just Ben's line? No, Greg's good. I'm not too sure there, Ben, if you can hear me. Basically, maybe try logging out and then try and logging back in, and just see how that goes, mate. Yeah, Valavan had it last week. So was that because you're on the phone, Valavan, or were you through the internet last week through the actual webinar? On the ePhone. Okay, cool, no worries at all. So yeah, just give that a go, Ben. Just log out and log back in, and just see how you go, mate. Hopefully you might basically get a better connection. Oops, so back over here, sorry. All right, so then when it says here about our financial budgets, so if we're wondering what a financial budget is, it's a plan that includes all the expected financial incomings and outgoings that one is forecasting to happen over the next 12 months. So it should present a financial overview of the business in the next year, including your cash and accruals. So I'll show you stuff like that. We can read it and I can talk about it basically, till the cows come home. But things like that will make a lot more sense when I actually basically start putting a few examples up, and you'll see sort of how they start to work. And it says that can also be considered a cash flow projection. So actually, I'll bring it up a little bit later on because it'll probably mess up my PowerPoint. All right, so the cash flow budget is slightly different in that it only budgets for direct cash in and cash out amounts, and it does not include items like depreciation and non-cash items. So, this is probably getting a bit too heavy into what we're going to be asked at the VBA. They're not going to start talking to you, I doubt, about, okay, you're running your own business, you've got scaffolding, you've got an office, you've got all these overheads. How are you claiming the depreciation on those items? So don't be too concerned about that. So that'd be something that your accountant would be definitely helping you out with, and you might be aware of it if you've got a rental property or something like that, where you claim the depreciation every financial year, depending on how old your building is. All right, so why do we need a cash flow budget? So what it actually does, sorry guys, I just had a question there for a second. Yeah, is exactly right, Valavan, and I leave the account as far as working out depreciation, there's no way in the world I would know how to work that out, and I don't think, as I'm saying, you wouldn't be expected to actually work that out or talk to it in a great detail in your interview. As I said, you'll find, I think, a lot of this is probably going to be, I think, a bit too deep into the business side, and it's probably more like that because some of that would have been written in your previous basically are your business plans. So that's why we probably talk about it, but don't stress. As I said, like the depreciation, no one's going to ask you to work that out and talk into too much depth about it. And if they did, you just say, look, that's something that my accountant manages. So a cash flow budget, it forecasts the flow of the cash and other funds in the business. And the cash budgeting, which can be known as your planning, is a critical part of the budgeting because it's essential to have the right sums of cash available at the right times. And these things, as I keep saying, will make sense once we see this this spreadsheet a little bit later on. So the benefits of obviously being in financial control of the business is probably the top one, which we all like. Life is easier and more pleasant when the business can meet its commitments and plan for the future. And also ensure that the sufficient cash flow is available to meet GST and taxation payments. And suppliers and financiers are more supportive of business that meets their commitments on time. So, as I said, I'm no accountant, so take or leave my advice. But on this second one here, like I have obviously run my own business for probably the last 15 years, and this second point here is to ensure that sufficient cash flow is available to meet the GST and taxation payments. Now, depending on how you run your business, what I always do, guys, even when I had 12 staff, I had a different bank account where what I would actually do was actually called a tax management account that was set up through our bank planner. And what we actually did was pretty much every week when I paid wages and basically did my bookkeeping and whatever else I had to do, I put separately aside all my GST and all my PAYG, so that the tax I had to hold for my staff and also their super. And it was totally in a separate account. And then that way I wasn't tempted to touch it. And then I knew that I could obviously meet those requirements when it came my quarterly BAS statement to pay all that over. Now I know it does, as a builder, sometimes when we've got hundreds of thousands of dollars and we've got all this money coming in and coming out, it probably does become attractive to go, well, geez, I'm only going to be, I've been held up 2 weeks with that progress payment. I need to pay my supplier, or they're not going to deliver the concrete, or whatever it would be, to dip into that basically GST and the tax and so on that we're withholding. But yeah, that obviously sometimes it happens, but obviously not ideal. So if we can hopefully manage our money a bit better, we can meet our needs and don't actually have to do that. Because the last thing with everyone is come GST time, and we've got the end of the month and we haven't actually got that money that's on our BAS statement to actually then pay the Australian Taxation Office. All right, so if you're not achieving your planned profit, what are some of the actions that you could take? So review and analyse the areas that are retarding the business, seek advice from outside experts, and also if you've got some successful peers you might be able to talk to, you can refer back to your business plan and then analyse profitable competitor performance. So, that does, that's sort of, it's great to say that, but how are you going to basically find out what your performance of your competitors are? So probably the first one is obviously look at your business plan and see, is there something that you missed out there? And normally when we're not meeting our profits, guys, from my experience, it quite often comes back to when we've actually quoted or tendered the job. It might be not having an understanding of how long something was going to take. Sometimes we just actually might make a mistake and basically get the quantities wrong on the time frames. And for those guys who are doing or looking at doing renovations and extensions, in my experience, that's the hardest part, is going, okay, how long is this actually going to take to actually, pull off these old weatherboards, put the new ones on? Because with a lot of that, we obviously quite often aren't on a meterage rate. So we actually have to then estimate how long it's going to take for that to happen. So basically a way that I've found successful, and it takes time to actually get this to sort of be what sort of looking for, to be like a successful sort of template, is when we used to do the renovations, whenever anyone invoiced, they had to actually outline what they did for the week, and that way then was going, okay, well, I've allowed 3 blokes 6 days to install that cladding, and then when the invoices came in, I go, okay, it actually took them 7. So there's 1 day of 3 blokes, basically I know that I've underquoted for. So then next time I go to do that job, if it was the first time I'd installed the cladding, whether it be a matrix cladding or just a standard weatherboard, I would know, okay, this is how many linear meters of weatherboard I can install in this time. So it sort of does come from experience. And if we're obviously working at the moment on the tools, we've probably got an idea of some of the elements of the job. And also there are systems out there Not a huge fan of them, but if you haven't heard them, they're Cordell's and Rawlinson, and they're basically an estimating company where they basically they can outline how long it should take to do, so many square meters of yellow tongue flooring. So I said I don't think it's overly accurate, and but yeah, if you're totally blind to a certain aspect, that can be a way where you can figure out, okay, this is how much the sheet cost, and this is basically how long it should take to actually install that. And Subit has written there, it's often hard to get competitors' figures, and that's exactly right. So I sort of ignore basically that bottom one. But yeah, try and figure out, what it is where we're falling down, and then work out, what it is we can improve to try and figure that out. All right. So from a business management perspective, who could you engage to improve your profitability? So this is another thing too. We're going, okay, I've come in on time. I've got all my quantities right, but I'm still not quite making the money that I'd like to make. And so you can basically get business coaches, a competent accountant or a financial planner, and they might be able to talk to you about different ways to increase that profitability. And it might be, you might be using a lot of labour hire. Or you might be using staff and go, okay, well, actually, I'll put the guys on a meterage rate. So think about, maybe a business coach or someone within the sector, and they can probably work out how we can actually increase that profitability. So that's why it's good to actually keep a record of what everything costs. And then the next time you go to do it, you can then maybe try and put a little bit more cream on top to try and make a little bit more of a profit. And not that I want to go too much into it later on, or too much now because it'll probably pop up later on, but I know that when we first go out on our own, it's probably all about trying to get established, and we want to sort of be competitive with our prices and make sure we've got work. But my advice is, don't undersell yourself. Like, you guys have got a strong skill set, and by all means you want to win the job, but don't go in basically too low so you're not going to make any money out of it. That was one thing that I learned when we did our first business coaching, I said, in the hospitality business. And we had these formulas on how much we were going to charge for dishes, and similar to what we do here basically in our construction industry. And we worked out, okay, how much labour is involved in this? What are the materials? What are my overheads for, basically the rent of the premises? All these sorts of things. And we had a bit of a formula how we would work out, the percentage we would charge on top of all the different things that we would basically sell in the business. And I remember when we did our business coaching, and I sort of then took this into the trade side as well. But I'll talk about how we were coached was when the guy came into our hospitality business and basically said to us, okay, see that meal there, how much do you, we'll say it was a big breakfast. I know I'm getting sidetracked, but I think this is a good way to explain it in real terms. Basically, how did you get to the price of that big breakfast? And we said, okay, well, here's our formula, blah, blah, blah. He said, okay, that's come to $16. He said, well, that's great, he said, but I can guarantee you people would pay $20 for that big breakfast. So why would you not charge $20, and get an extra, 25% on what you've already charging, because it's all profit. He said, so don't try and make it as cheap as you can. He said, basically do your formula, make sure you cover your costs, and then basically charge what you think people will pay. And so we basically did that across our menu, and and so then we not put all our prices up, but new things when they came on, we would then basically put them on, and it was basically all profit. And that's what the sort of things you guys can start to do within your building industry, and especially once you get a bit of a name for yourself and people are coming to you, you can go, okay, well, look, I know that this, basically this renovation, it's probably ain't going to cost me, 100 odd grand, but I know that the market is going to charge, the market rate for that's 150. So why am I going to undersell my skills? I've got all this homeowner's warranty insurance I've got to look after, got all my tools, everything else. So if that's what the market dictates, why would I undersell my skills and not charge that? So as I said, I know in the beginning you're probably going to want to get work, but by all means, don't be scared of putting the price on there that you think you're worth, and and then if you start to lose a few quotes, then go, okay, well, maybe I need to trim it back a bit. But by all means, I wouldn't be out there working on a slim margin just to trying to win work. We may as well be back on wages, and that's just my advice. But you guys, as I said, take it or leave it. All right, from a domestic builder point of view, how would you define an asset, and what are some examples of assets? This might be something, guys, that you would still get in a multiple choice, so maybe highlight this one in your book or write it down. So assets are items of value the business either owns or the business has use of that helps in revenue, and these include cash at the bank, your accounts receivable, and stock on hand. So when it says stock on hand, because this is a business subject, it relates to all sorts of different businesses. But stock on hand, I suppose if you're a different trade and you carry, you might have, you might be a tiler, and you might find that if I buy pallets of tile adhesive, then basically I can store that and I save so much money per square metre when I'm putting out my tile adhesive. So that would be basically your stock on hand, and that is then seen as an asset to your business. So there's a couple of examples there of what an asset is. All right, so then also very similar is what is a liability. So it says here, what are 3 liabilities that a builder is likely to incur on a regular basis? So we'll talk through these, and then it'll make us make a little bit of sense of what a liability is. So the liabilities are obligations that your company, the building company, must pay. So these include accounts payable. So we've obviously been invoiced from our hardware suppliers, from Timber Truss, from National Tiles, whoever. All these accounts that we've been invoiced that we need to pay their liabilities. If we've got any bank debt, so we've taken a loan and we're obviously paying back monthly, it might be an interest-only loan, whatever it would be, basically that there is also a liability. And then payments by our customers. So that's a liability because we obviously need, I know it's different because we're not actually paying that, but it is a liability to the business because we actually haven't been paid, and then if we don't get that money in, then as we would see how that would basically stagnate the cash flow of our business. Obviously then our taxes and our wages that we owe as well. So that's asked for 3, but there's a few ones in there as well. So that might be something that you might get in a multiple choice, and it's probably more so the wording around it, guys. Because obviously most of us are tradesmen, but we want to start to become businessmen as well, and so it's probably just more the terminology of a liability. If I then said to you, okay, well, what are some expenses you need to pay? You would be able to basically rattle those off the top of your head straight away. So it's just trying to get used to the terminology of how sort of accountants and business people speak. So then what are our fixed current assets in our equity? So this is something that I'm big on, like when I teach other courses, not builder registration, but estimating courses. This is one thing that guys quite often forget to actually include in their estimation. So we'll talk about these, and then I'll talk about how they relate a little bit later on. So first of all, we'll talk about our fixed assets are. So they're long-term, and they're tangible, basically assets held for business use and not expected to be converted in the current or upcoming fiscal year, so the financial year, such as your manufacturing equipment, might be your real estate. You might actually own a building that you run as an office. Obviously the furniture, you have it in there. And fixed assets may also be referred to as plant. So they should say assets, guys, not assists. So that there, if you can see my mouse, should say fixed assets may also refer to as plant. So that might be depending, I've got a guy that I train in a face-to-face class, and he's got his own landscaping business, and he's got a couple of bobcats and other plant. So that would there come into his fixed assets. So your current assets, so it's a balance sheet item. As I said, these things aren't, you're going to have to remember off the straight of your head. It's off the top of your head, just things you want to sort of start to be aware of, and more giving you skills for, as we start our own business and basically start to do our estimating and have all these different liabilities. So our current assets is a balance sheet item which equals the sum of cash and the cash equivalents, your accounts receivable, your inventories, prepaid expenses, and other assets that could be converted into cash in less than 1 year. So if you've got creditors, they'll often have interest in how much the company has in fixed assets, since these assets can be easily liquidated in the case of the company going bankrupt. So in addition, current assets are important to most companies as a source of funds for day-to-day operations. So, it's, I don't know if anyone's knows of anyone who's had a little bit of trouble with their cash flow. One of my mates in Queensland, who's a builder, basically he had a couple of jobs that didn't go very well and sort of lost a bit of money on them, and basically he had he didn't declare bankruptcy. He wanted to pay everybody out, and basically that's what he used to actually some of the debt collectors. So one of the companies he owed money to basically came over and said, look, this is what you owe us, because he'd written them all a letter basically saying, hey, listen, this is what's happened. Basically, I owe you this much money. Basically, I can't remember how he worded it, but I didn't make the money that was, forecast on this job. How I'm going to basically get that money to you? I've got my house on the market. It should be sold within 3 months. And basically, once I sell my house, then I will clear all my debts. And so what they actually did, they were basically interested in his assets. So they were able to come over with their debt collectors and take some of his personal assets, not his business ones, but his personal ones, is sort of until he cleared his debt. So that's why quite often, you might find people are interested in what your assets are for your lending capacity, and if you're setting up accounts and so on. Hey Giuseppe, how you doing? I'll chat to you at the end of the session too, mate, if you hang around. All right, so the equity, this is probably something we are familiar with if anyone's looked at getting a rental property. So the equity is the owner's current investment in the business, calculated as your assets minus your liabilities. So to put that in sort of a residential term, if you've got a house, you might have a house that's worth 600 grand, you owe basically 400,000 on it, so there you've got $200,000 worth of equity. So that's how normally if you're looking at getting another investment property, the bank will say, okay, we know if all things went pear-shaped, we know we could sell your house for 600,000. You only owe 400 on it, so therefore we'll lend you this much money because we know we can actually get that back from you. So that's sort of where your equity comes in. And it'll be equity within your business too, not actually talking about your own personal home. We'll talk about it a little bit later on, where a lot of guys have actually companies set up to try and separate their personal assets from their from their company assets. So what is liquidity? That's basically a word I always struggle to get out. So if you hear me slur through that, it's something I get tongue twisted with. So it basically measures the business's ability to meet its short-term commitments. And it also means being able to convert something to cash in a shorter period of time. And so, we might have basically an asset, and we might go, okay, I'm a bit short of cash, or not even short of cash. I might even want to, start a new project, whatever it would be, and something that we can quickly turn into cash, so that we can then, basically do our own development or basically whatever it would be. That's what it is, something we can convert into cash quickly. And then also, basically just what I spoke about there. So it's an important aspect of a balance sheet. So this would be something more your accountant would do. It's important from a cash flow point of view. So since it shows you can pay your bills, it's also especially important for loans. So saying, okay, this is what I've got. It could be sold if need be to basically get that money. All right, so this is something that we probably want to be aware of and be across, I suppose, and we are probably already doing this, to be honest with you. So when it talks about our fixed costs to a domestic builder, what are they? So a fixed cost is a cost that does not vary depending on the sales level, such as your rent, your property, your tax, insurance and interest expense. So fixed costs are incurred in the normal operation of an ongoing business. So as I said, ones we've spoken about before, so the rent, you might have an office that you have as a showroom, what it would be to meet clients, or you might just even have a shed where, we're saying, if you're like most of us, we've got that many tools, scaffolding, whatever it would be, and we might have a shed that we've hired to put all that in. So that's one type of fixed cost, because we know we're paying that all the time. If you think about your insurances, your homeowner's warranty insurance, even insurance on your cars, things like your tools, things like that we've got insured. Obviously, your interest, if we've got bank loans and so on. So these are things that are fixed costs that we know we're going to be paying for the next 12 months, and whether you pay it on a monthly basis or as an annual fee, even things like your license, paying your license fees for your builder license, and what else would be in that fixed cost, even your memberships, you're a member of Master Builders, HIA, things like that, they're going to be fixed costs as well. And this will start to flow into our next couple of PowerPoints, but they're the things that we want to start to incorporate into our estimation. So at the end of the day, probably the thing that I see a lot that guys forget is when they're estimating, they sort of just look at the plans and go, that's what's going to cost me to build it. And when we spoke on a few slides back about how to increase our profit margin, quite often these are the things that a lot of guys aren't incorporating into their estimation. So if we're doing a job and we've worked out it's going to take 6 months, then we want to work it, okay, well that's what it's going to cost me to build it, But for those 6 months, what does my work cover cost me for 6 months? What does my rent cost me for 6 months? What does my insurance, my homeowner's warranty insurance, what does my mobile phone, my petrol, all these things, they're an expense of the business. And that's probably the thing that I see most often the guys don't sort of allow for when they do an estimate. So these are fixed costs, and they're actually quite easy to forecast because we know what they're going to be, and I'll show you that in these spreadsheets as they come up a little bit later on. So then what is working capital? So this might be something that you're asked basically in your multiple choice. And if you're wondering what the working capital is, it's basically your current assets minus what your liabilities are. So working capital means how much cash in the bank as well as your liquid, so that those things we've spoken about that can be easily converted into cash, and the assets a company has available to build its business. So that number can be a negative, it doesn't always have to be a positive. So depending on how much debt the company is carrying, and in general, companies that have a lot of working capital are more successful because they've obviously got the money there and they can expand their business and make improvements to the operations. And companies with negative cash flow, with negative capital, negative working capital, may lack the funds necessary to grow the business. And so, we might want to decide, okay, look, it's costing me this much money in hiring scaffolding all the time. I've got that many jobs, I'm only going to buy my own. But if if we're in a negative situation where we can't actually buy that, that's when it starts to impact on us. But as you could see, if we were in a positive cash flow, then we could start to look at it, ways we could save the business. Going, okay, I know it's going to cost me this many thousands of dollars when I buy it, but it's only going to take me, 9 months to get that back. All right, so this is another thing too, where with our gross profit, not something you might probably be asked at in an interview, but probably something where we want to start to know the difference between gross profit and net profit. You might be asked it in a multiple choice, but not so much in interview, but also for your own sort of development as a business person. And we'll basically go through these. So our gross profit equals the revenue minus the cost of goods sold. So I'll read through these and then I'll put it into context. Expenses associated with gross profit refer to the costs directly related to the sale, which can include manufacturing expenses, raw materials, labour, selling, marketing, and other expenses. So here's the example here. So for example, we've got a guy called Jonathan Haskins, and he's done a 2-unit development, and he sold it for 850 grand. So the cost of the land, the materials, and the labour for the project was $680,000. So therefore, the gross profit, we calculate that by going 850, because that's what we sold it for, minus our 680 equals 170 grand. So that's our gross profit. But when I go through the next couple of slides, you'll basically see the other things we need to incorporate into that to give us a true indication of the amount of money that we've made. So that's the gross profit. So once gross profits have been calculated, how you then calculate the net profit. So once we actually know that, so once we know our gross profit, so back here is 170 grand, what we actually need to do then is work out what our operating or overhead expenses are and subtract those from that gross profit to arrive at the net profit before taxation. So we go, this is the net profit of that job, and then obviously then we've got to pay our tax on top of that. So once the taxation's been calculated, we then arrive at our net profit. So when I refer to this slide, now it's going to be a bit small, so just bear with me a second, and I'm going to take this out of PowerPoint mode, and I'll make that larger so we can see it on our screen. All right, so can everyone? I'll slide it, but can everyone see those okay? Those figures there? Not the figures actually what they are. Yep, so you got it, because I'll make it bigger if you need to. So this is just a bit of an example of the things. So I don't worry too much about the columns up the top, but if you like, I can forward this PowerPoint over a little bit later on. But he's worked out what his basically what his labours, what his materials and direct labour are, and our subcontractors and so on. But as I said, that we now need to work out what our operating expenses were, and so when we get to that, these are the sort of things, as I keep talking about, when we're doing our estimation, that guys actually aren't sort of allowing for. And this is the stuff that we take out. So when he's done his unit development, he's gone, okay, I sold for $850, land, materials, labour, it cost me whatever it was. I came to $170,000 gross profit. But basically what he actually has to allow for, because these are other taxable items, is here, what was his account keeping and his bookkeeping? What does he actually spend on his advertising? Has he got an ad on the radio? Has he got Facebook? Has he got stuff in the local newspapers? What's his bank fees? What insurances has he got? What motor vehicle expenses have we got? Printing and stationery. If he's had to repair or replace any of his equipment. What subscriptions has he got? Master Builders, HIA. What's your telephone, your computer, your internet? Basically what's your work cover and your superannuation. So these are the sort of things that if they haven't been incorporated into here, because we've had everyone basically probably on subcontractors on the site, but we might have a few people who are on wages who might be part of your sales team, or they might be in your, I suppose, in an office environment where you might have maybe your wife does the books and you pay her, whatever it would be. These are things that we need to start incorporating to work out what our net profit is. And I said, once you can basically have an understanding of these, it's not too hard to work out what they are. Start applying them to your estimations, and then that way you'll probably start to realise that you're making a bit more money, because these things can easily be missed because it's just something that we spend every week. Yep, I go and chuck $80 in my car every week for petrol, and then when insurance comes up on my car or my registration on my car, I pay it. But if we can work those out and incorporate it into our estimating, we're going to have a better understanding of where our business is. And so, it's a bit hard to see all that on there, but it's just got some rough figures. Take it or leave it depending on your operation. Basically what it is. But they've worked out there, I think it was, I can't see the figures there. It probably comes up to 96,000, I presume. But don't be too concerned about the figures. I'll show you an actual spreadsheet a bit later on. All right, I'm just going to go back to PowerPoint mode. All right. So when setting a margin on costs, what do you need to consider? So your markup and your margin is a percentage of the cost. So margin is basically the same dollar amount expressed as a percentage of the selling price. So you might go, okay, if I'm building something for $300,000, I want to make $30,000 on that, so therefore my margin's 10%. So it's really, horses for courses. People do it different ways. I think probably as a margin, like as a percentage, it's probably easier to explain to people rather than go, okay, well, it cost me this much, this is what I made, blah, blah, blah. But if you can actually, it's easier to say, yep, okay, 10% is what I want to make on all my building projects. So then it doesn't matter if it's $300,000 or a $400,000 job, then you know basically what you're trying to achieve when we actually are quoting that job. So I said, there's different ways to do it. I know, and guys, they probably start out smaller and go, okay, well, this is what it's going to take me to do that renovation. It's going to take me basically 2 months. I know what all my materials and all, I know basically what it's going to cost me to build it. But if I'm going to basically be doing that for 2 months, I want to be making $80 an hour as a builder. So then they might go, okay, well then for my basically my labour involved on top of all that is going to be 40 hours a week at $80 an hour for this over 8 weeks, so therefore that's what I'm going to put on top as my margin. And I know, guys, that's how they'll start originally, and after that then they can work out, once they've done a couple of jobs, they go, yep, okay, charging myself at $80 an hour, I'm happy with what I made, or no, I'm not, so I'm going to charge myself out at $100. And then once they sort of do a few jobs, they can then actually convert that into basically a margin. They go, okay, my margin needs to be 15% for me to make the money that I need to make for being involved in that. So, it's really something that, whatever's going to make sense to you, I suppose, how you work out what you want to make. All right, so sales, expenses and profit. So the markup, you will have, I looked at the wrong slide there. You'll have to look inside your business, taking into account your sale expenses, your profits before setting prices. Have you estimated the sale, operating expenses and reductions for the next planning period? And have you also estimated a profit objective for the next planning period? So that's sort of similar to what I was talking about previously, looking about our time we're putting into it, sort of forecasting what we're going to basically charge, and then incorporating all our expenses, not just the materials that are actually incorporated in actually building that project. All right, so here's one about your competitors. Do you know what your direct competitors are doing price-wise? Do you regularly review your competitors' ads to obtain information on their prices? Now, I know it really depends on what line of work we're in. If at the moment, if you're doing, frames and you're doing it for, for Metricon or whoever, there's pretty much sort of standard rates. But try and think outside the box. If you do have a competitor, and you might just see them advertising, if you're going for a kitchen and bathroom license, you might see them advertising in the local paper. And you might start to think, okay, well, what are they doing price-wise, and then how are they actually obtaining, how are they getting access to the market? Now, one thing I've noticed, it's very easy to actually just bag your competitor and go, oh, yeah, someone, used them, and they said they were shit and this and that. But at the end of the day, look at what your competitor does well. Don't just look at them from, they were crap at this and crap at that, because it's easy to jump on the bandwagon and bag them. If they're winning work, whether they're the greatest tradesman or the worst tradesman, if they're winning work, they're obviously doing something to win that work. So look at what they do well as what they do poorly. And back to like the marketing we did, and I said I hate going back to the hospitality industry, but to me that was sort of where I had a lot of business coaching to run that business. Whilst I was sort of still on the tools, I was heavily involved in sort of the marketing side of it, and that was one thing that basically our business coach said to us. He said, mate, where your cafe is located, there's 6 other people you're competing with. He said once a week, basically go and have breakfast there. And I felt a bit awkward about it. Geez, I'm going to go in there. But I thought, no, bugger it. So I went in there. He said, go in. He said, see what's on their menu, see what deals they're offering, see what they're charging, see what they do well, and then try and incorporate those good parts into your business. And that was another thing that we basically did. So as I said, if you've got a direct competitor, you might be trying to target, as I said, kitchens and bathrooms, you might be trying to do decks, whatever it's going to be. If the target market you're chasing and you're seeing someone in that, you might hear their ads on the radio, whatever it's going to be. Don't be scared of looking what your competitors are doing and go, yep, that worked well. I'm going to incorporate that into my business. It might even be looking, at Facebook pages. And that's one thing now with social media, like the amount of people who do, and it's not my strong suit, guys, as you can see by me being late tonight and no shirt on and all sweaty. IT is not my strong suit, but doing stuff where people are putting stuff on Instagram all the time and having followers. And one of the guys I actually train in Geelong, he's going for his kitchen and bathroom license. And what he's going to actually do on his next kitchen and bathroom license is pull out the exhaust fan and actually put a camera up there and basically film the 3 or 4 days it takes to actually do that kitchen and bathroom, and then sort of cut it down into maybe like a 2-minute slideshow and put it on his website. So then that's going to be a marketing tool for him where people can see sort of the before and the after, and trying to engage them to go, oh, wow, that's how they did that, and really use it as a way to engage future clients. And so that was something that he thought would work quite well in his business. So that might be something you say, oh, geez, okay, and maybe that's something that I can do. And so, have a look at what your competitors do, and by all means, don't just look at it from, geez, they're crap and I wouldn't do that. Look at what they do well. And I know, I worked for Simmons Homes for a couple of years, and just seeing like a few of the things that they do, and I know everyone likes to bag the volume builders, but at the end of the day, I know Simmons, the couple of years I was there, they profited $20 odd million. So I don't know about you guys, but I wouldn't mind turning a profit of $20 million over. So look at what they do, and I know it's hard to compete with them, but there might be certain aspects that they're doing as far as their advertising or chucking in a few little things here and there. There's a guy who I trained from Melbourne, and he was very big on his environmental side of building, and so that was something that he targeted. He was very passionate about using sort of recycled basically timber and stuff like that, and that was a market that he found there was a bit of a niche for. He looked at what some of his competitors did, and then basically made his own sort of version, and he's actually been successful in that. So by all means, have a look at your competitors, and don't be afraid to try and do what they do well and incorporate that in your business. All right, so what are our overhead expenses? So we did see that in that chart that I lifted it up before, basically where it had a few two of them listed there, but here's a few other ones. Overheads, expenses, ongoing administrative expenses of a business, which cannot be attributed to any specific business activity, but are still necessary. I'll just check that on mute for a second, guys. Someone's TV might be coming through. All right, sorry about that. So yeah, I've just checked you on mute, guys, because of someone's TV coming through. So if you've got a question, just type it in. So yeah, overhead expenses are ongoing administrative expenses of the business, which cannot be attributed to any specific business activity, but are still necessary for the business to function. So like I've been talking about, our rent, utilities, and insurance. So they're basically our overheads. And there'll be more of those, and we'll see those as we do our exercise later on if you choose to do it. All right, so what trading terms would you offer to subcontractors? Now we did speak, it was either last week or the week before, and I was saying to you guys about when we're trying to manage our cash flow that you know, how we can get those accounts. And if you didn't do the session a couple of weeks ago, I'll just basically go through that again. But it's common trading practice that when we're trying to manage our cash flow is that if you get basically an account at your hardware store, that what normally happens is that they basically you put it on the account, the end of the month they basically send you an invoice, and then you've got 30 days to pay it. So if we're able to, it's a good practice to try and get basically as much stuff as we can ordered at the beginning of that month. So therefore, in the first 2, 3, 4 days, we're basically getting as much stuff as we can, because at the end of the month they invoice it, then we pay it at the end of the next month. So realistically, we've got 60 days to actually pay that material that we've purchased. So that's one way we can offer, we can basically manage our cash flow. But another way too is also to basically what your trading terms are going to be with your subcontractors. So we'll read through this, and then I'll talk about sort of my experience with it. So normal commercial trading terms are 14 to 30 days, depending on the relationship established with the subcontractor. So here's probably the biggest point. The longer the subcontractor takes to be paid, the less motivated he's likely to be, and the less incentive he has to do a good job. So, a lot of the time our subbies, if they're plumbers or plasterers, it might be just, okay, mate, at the end of the job, once you finish the task, invoice me and I'll pay you. But if you're doing renovations, extensions, you might have some chippies who pretty much work for you on a full-time basis, but they're contracting. And I know that when I was contracting, there was nothing worse than you put your invoice in every week and you'd go 4 or 5 weeks without being paid. So that's probably the ones where they get the less incentive, because they're still turning up every day and you haven't paid them for 4 weeks. And if they do, they have a less incentive to do a good job. So large companies tend to dictate longer trading terms because they can, and the subcontractor tends to accept inferior trading terms because they want the work from that company. So probably something that we probably might have experienced in our early days. If you got a trade qualification, you might have come out of your apprenticeship and gone, yep, well, if I could stand frames for Metricon or do fix out for Metricon, I'd know, because you're just me and an apprentice, and geez, I could make some money because I'd have this many I could do. I could knock them out in a week, and whatever it would be. And normally, because they're such a big player in the market, we probably accepted inferior trading terms because we wanted that work. So what I'm trying to get at here is, when you actually then become the builder, it's up to you how you actually then want to basically negotiate your trading terms. So we don't want to make it unrealistic that no subbies want to work for us, but the longer that we can actually, I shouldn't say delay, but because we're not trying to not pay them, but the longer we can extend that period until we've actually got to pay them. And when I say extend it, like, be upfront. Don't just say, okay, well, he's invoiced me on 7 days and I know he won't crack the shits for 3 weeks. It's all about going, okay, well, when you come on, mate, this is the trading terms. It's going to be 14 days or 30 days. So basically, whatever you choose, the longer you can make that, the more benefit it's going to be to you. And, I know, commercial quite often is 30 days. Residential tends to be more, in my experience, 7 to 14. But if you can get it 14 days, and one thing it does do, it actually frees up, a lot of guys sort of underestimate this, but it frees up a lot of your time in your bookkeeping. So you just think about it, if you've, say, got, I don't know, 10 guys working for you and they're giving you an invoice every week, that's 10 invoices you're doing every week. Whereas if they're doing it fortnightly, it's only, you've cut down your bookwork time, because then it's only 10 invoices every fortnight. So that's another thing I think which is underestimated, is the amount of time that we probably spend sort of managing our business. And I think a lot of us sort of just quote our time sort of when we're doing, basically time on site, or we're doing stuff directly related to making business for our company. But we've got to then start to work out things like this. How can I manage my time smarter? And that could be by putting your guys on 14 days or 30-day invoicing. So 30 days might be a bit tough, but as I said, the longer you can do it, it manages your cash flow, and it also cuts down your bookwork time. All right, so what costs would you need to consider when calculating labour charge-out rates? So this is something to put it into context. Let's just say, yep, I'm building a job, I'm doing a renovation. I've got 3 guys for me who are all subcontractors but pretty much work for me full-time. They're carpenters. So they're charging me $45 an hour. And also I've got an apprentice there. What do I need to charge them out so that I'm making actually a profit on having those guys on my site? So we'll just read through these, and then we'll sort of try and put a bit of context if it doesn't make sense at the end of it. So the gross average hourly charge out rate, which allows a regional margin for the builder. So we want to charge them out and still make a margin for them. It's no different to when we did our contracts, where we put a prime cost item on or a provisional sum item, and then we put a builder's margin on top to actually make some money for managing that prime cost item. It's no different when it comes to our labour guys. So at the end of the day, as I spoke on the previous slide, we've got these guys, we've got to pay their invoices, we've got to pay their superannuation. There's other stuff that we've got to do that relates to them. So we want to be charging them out at a rate that's greater than what they're charging us, because we want to make a margin for managing those guys. So for example, if a second year apprentice costs the builder $19 an hour, plus there's going to be then costs for when he's on holidays, when he's on sick leave, when he's got to go to school, like as in his TAFE, his superannuation, and when you work that out, that could add an average of $5 per hour. So this apprentice then costs that business $24 an hour, even though it's only costing him $19 that we're saying your hourly rate's $19. When we work out all these other things we have to allow for, that can add $5 per hour. So this apprentice says it costs $24 an hour, but if we work out his rate, okay, we're doing this renovation for the next 3 months, I'm going to charge him out at $24. We're not actually making any profit on him. So we may then need to work out, or charge him out at $32 within our estimation to make a profit from managing that apprentice. So some other things that we need to actually calculate as well is the wages of our direct labour employees. So there also might be them, holiday pay, work cover, superannuations, and then provisions for long service leave. So just start to think about these guys. These are, as I said, the things we don't see when we're estimating, but these are the things that we want to start to incorporate, because as we spoke early on, how can we increase our profit margin? Here's basically straight away, if you're not doing that, and this guy here, this apprentice, we've added on an extra $8 if we're on that job for 6 months. So what's that, how many weeks? 26 weeks at 40 hours a week. I don't know, my maths isn't good enough to work that out, but you could see, that'd be cream into our pocket for charging him out with a bit of builder's margin on top of what he costs us. All right, so just looking at the time. We'll do a couple more and then we'll go and have a little bit of a break. So in terms of your domestic builder's cash flow, what events could cause a builder to run out of cash? So this might be something that just might be general conversation within your interview. So the guys who have gone through, I've probably had 4 guys I've spoken to in probably the last 3 weeks that have gone through, and it depends on that. They've been probably pretty strong business background anyway. They've been a bit older. So their interviewer just asked them a few rough questions. So if you're not that experienced in the business side, start to look at questions like these, and then think, okay, if I do get asked that in an interview, basically if I was starting, this could start to happen to me, how could I turn it around so then it became positive? So in terms of the domestic builder's cash flow, what events could cause us to run out of money? So obviously the builder's quotes are incorrect, and that's obviously to the detriment of the builder. If we've worked out, yep, this is what it's going to cost me to build that, and I've worked out the incorrect labour portion, or I haven't quoted enough for the materials, then that's going to have an effect on our cash flow. So unexpected negative cash flow circumstances might occur. The builder is unable to attract enough work to meet the commitments. So we might have all these overheads, these expenses, but we might be quoting our jobs and not winning any. So that's obviously going to be of detriment to the company. If an owner refuses to pay basically a stage payment. So that's something we'll see later on. So that's why obviously when we did our contracts in the last couple of weeks and we broke down what our progress payments were. It's one thing to go, yep, I'm going to be at frame stage, so therefore I know that in June I've got 130 grand coming in because that's what my contract says that I've got. But if for some reason the owner disputes that, then yeah, that can obviously have a big effect going, geez, I thought I had 130 grand coming in next week, and they've disputed that. And yeah, how do we go about resolving that dispute so then I can actually get paid my money? So the builder takes too much money out of the business. So that could be another thing where we've been going pretty well. We've started to grow. Okay, I've bought this scaffolding or I've bought this excavator, whatever it would be. And then all of a sudden we've got a few bills that we need to basically pay that we've committed to. And we might then go, geez, I actually haven't got that money. I wish I hadn't have bought that scaffolding. So we've got to be mindful of that as well. All right, so this might be the last one. See how far we go. Yeah, we might do this one here and then basically have a little bit of a break. That'll get us to probably 7:15. So what details need to be on a tax invoice? So this, we're probably invoicing at the moment, but we also want to be checking what our subcontractors are actually putting on their tax invoices to us. So it's got to have the word tax invoice. Now, that's actually not 100% accurate. It's only got to have tax invoice on it if they're claiming GST. So just be mindful of that. If your subbies are claiming GST off you, they've got to have tax invoice. If it's not claiming GST, then it can just be invoice. So tax invoice for your GST, it's got to have the company name, the address, and the ABN. And you should also show a subtotal that has the GST amount and GST inclusive total amount. So I know I trialed a few different invoicing programs, and some basically would say this is what it costs, then this much GST, then give you a total. But I have seen other ones where it just goes, this invoice is for $1,500, and it is inclusive of GST. And that it's just frustrating because I do that when I do my own accounting or my own bookkeeping, and I get that with a few invoices that I get, and then I've got to actually go and work out what the GST is on it, so then I can put it into my program that tells me what the GST amount is. So that's when it says down the bottom there, if the GST amount is not explicitly shown, then the invoice must describe as GST inclusive. So that's one thing that we want to be checking, basically, of our subbies, I suppose, because that'll lead into this one here, and I'll bring it up after our break, is about checking guys basically if they are registered for GST. I haven't encountered it firsthand, but I've heard lots of stories from guys that I know and that I've trained in the past where they've had basically subcontractors invoice them and say in 10% GST, but then it's turned out that contractor actually hasn't been registered for GST. And when we come back from the break, I'll show you how we can actually check that, and and then the consequence of that if you don't do it. So it's 7:15. I think the guys normally I think it's 15 minutes we normally have, guys? Anyone need any longer? If you want to have a smoke or if you've got to go and quickly have a bite to eat. So if not, just type in the box if you want longer than 15. And if 15 is all good, then we'll just come back at 7:15 and we'll go through that, start going through our BAS. Yep, no, so all good so far for 15. All right. Sounds good, guys. I'll see you at 7:15 then. All right, guys, welcome back. Hopefully you're all refreshed. What I'll do, I'll just take you off mute again. There hasn't been too many questions, but just in case you've got something you want to talk, hopefully that feedback stopped coming through. So we'll see how we go. All right, so we spoke about what needs to be on our tax invoices, and what I started to do was tell that's about checking if our contractors are actually registered for GST. And so what I'll do, I'll just show you up here. So if for some reason, let me open up. Oh, it's over here. Give me a second. I just got to go from my other screen. All right, so if you wanted to, obviously when you get your invoice and the first time you've actually worked with this contractor and you want to check and they've charged you GST and you actually want to check that they're actually registered, what you can actually do is just go ABN lookup, there we go. Takes us to here and you can put in their ABN number. So you can search by their ABN number, their Australian company number, or by their name. So let's just go, I don't know, Smith, and there'll be a whole heap of Smiths come up. Obviously if you did the ABN number it would be only one because it'd be very specific. Hopefully Smith works, it might make a bit of a goose out of me. And that internet's really slow. So here we go. So there's one on here. So this is BD and BA Smith. So that's their ABN number. So you know, yep, I've got the right one. And I'm pretty sure that if we then click on it, yep, so it tells us here, basically this is the entity name. Basically their status is that they're active and they started back in 2000. And the entity type, they're a private company, and their goods and services tax GST, they're registered as of the 1st of July 2017. sorry, 2017, 2000. So that's how you can go and check to make sure that someone is actually registered for GST, because what happens is if you don't check, what's going to happen is they're going to charge you 10% extra. They're going to profit that 10%. And then when you actually then go to do your BAS statement, then you would actually then be claiming that within your BAS statement. So then you'd also then have to pay if it got found out that, yeah, it just gets very messy. So make sure that obviously anyone who is charging you GST and you're paying it and then claiming it later on as an expense, that you want to make sure that they're actually registered for GST. All right, so let's go back to this PowerPoint. All right, so we're just going to talk about what a BAS is, what an ABN and what PAYG is. So our BAS guys, we probably all are doing one. If you're not, it's the business activity statement, and it's something that we submit to the ATO, so the Australian Taxation Office, and basically all businesses report their tax obligations on it. So depending on how often you do it, we'll talk about how often you can do it a little bit later on. Most people do it quarterly, but we'll talk about that coming up. So then on PAYG, basically known as your pay as you go. So they're normally basically your tax. So if you've got employees, if you're withholding tax from them, so if you've got an apprentice and he's, his tax rate's $100 a week, then you're withholding that tax, and it's something then you report on, basically to say this is how much tax I've paid, and then basically send that over to the taxation office, normally quarterly as well. So when I say normally quarterly, all businesses are different, and your accountant will tell you, whether you can do it quarterly or annually or so on. So yeah, give or take, don't take it as gospel that I say it's quarterly, because you might be able to get a different arrangement where you can actually then do it annually. All right, so and our ABN, which I don't think it talks about there, is basically our Australian, is your business number. So basically that's, we put that on our invoice, and that's what we saw before when I did the ABN lookup. All right, so there's a variety of different BAS forms which an organisation can complete, and the form which a business receives depends on the taxation liabilities that that organisation has. So statements are usually issued quarterly. Some roles can be reported at different frequencies depending on the business structure and the income. So some roles such as GST can be reported annually, subject to eligibility criteria being met. So although activity statements are usually submitted quarterly, some entities are required to report obligations on a more frequent basis, and some entities may be required to report their pay-as-you-go withholding liabilities or GST on a monthly basis. So I actually did work for a company where they had to do their super monthly. I know that when I used to pay super, basically I was doing it quarterly, but yeah, this company got caught out for, they were a big company, they had about 800 employees, and they weren't paying superannuation on time. And so once they got caught out, they then had to basically they got a pretty big fine, and they had to basically start paying that superannuation monthly. So just a bit of, not something you'd be asked in your interview, but just for your own sort of benefit. If you're, I got caught out once for paying superannuation late, and I was trying to be a good bloke about it. I had someone new who'd started and said, yeah, look, this is actually the superannuation that we put our employees superannuation into. But if you've got your own one, then basically give me your details and I'll put it in that account, rather so you don't end up with, 4 or 5 different superannuation accounts. And they're like, yeah, no, that'd be great. I'd rather not have another one, or I'll give you my details. Anyway, and it went on for a couple of weeks, and it got to the reporting time and they hadn't given it to me. And I was pretty young at the time, and so I sort of thought, okay, well, I'll get it. And I got it, and it was about a week after the reporting was due. And so even though I'd reported on how much I was paying in super, I didn't actually pay it until about a week later. And so I actually got a fine for paying that superannuation late. And so I explained, saying, well, if this was the scenario and I didn't want to set up a whole new superannuation account, the employee had said that no, they didn't want a new one set up as well, and they would give me their details, and they just took too long to give them to me. And I was basically told that it was my duty to make sure that the superannuation was paid by that date, and if I didn't have an account given to me by the employer. It was my obligation to actually set one up. So the fine, I can't remember what it was basically a percentage of whatever that payment was going to be. So there's one for you guys if you're do have that encounter with somebody. Don't do what I did and hold off waiting for them, give them their deadline, and then it'll take you a week to set it up anyway. So definitely set it up, and that's their bad luck. They've now got an extra super account because they haven't given you the details that they needed. All right, so there we go. This talks about ABN here. So it stands for our Australian business number. So that might be something that'll pop up in a multiple choice. What is an ABN? So it's Australian business number. So like a tax file number, it's basically it's a unique number that represents basically who we are to the tax office. And when registering for an ABN, you also have the option of registering for GST and the pay-as-you-go tax withdrawals for your employees. So once you have an ABN, that's recorded at the Australian Business Register, and some details will publicly incorporate, like the ACM, which will be a company number. So basically that just talks about that, there's certain things which will be made public, which is like we went on to that ABN lookup before. So it obviously doesn't give you your where you live, but it does actually say the postcode of where you registered your business at. All right, so this is your pay-as-you-go. This is another thing I'll read through and then explain, and some of you guys might have encountered this. So pay-as-you-go is the Australian tax system for withholding taxation from employees and other payees in their regular payments from employers and other payers, for example, superannuation funds. So it's used to collect income tax, higher education loan programs, so we'll talk about that one in a second, those repayments and Medicare payments. So PAYG withholding is a legal requirement to withhold amounts for income purposes. If you have employees, you are to withhold tax from payments you make to them, and you may have to withhold tax from payments to other workers such as contract workers. As a new employer, you must register with the tax office before you withhold from your employees. So yeah, if you've got employees, you need to actually say, I've got employees, and be registered for that. But the one a couple of ways, just on my experiences, I do it, guys, when I do my payment program, it tells me how much tax I'm got to basically withhold. And as I said, just like my GST, if I'm paying someone, an apprentice, $400 a week and I'm withholding $50 tax, so I put 400 in his account and $50 into a separate account of mine, so that then that doesn't get mixed up with my cash flow and everything else. And I know when it's time to pay, I've got that money sitting there with my GST. So the one thing you might not be aware of, if you can see my mouse here, is the higher education loan program requirements. Now, not something you'll be asked in an interview or multiple choice, but just for your own benefit. What that is, if someone goes to university, and they've got a new thing now too when we do Cert 4s and diplomas and so on called Vet Fee Help. It's basically when you get a loan from the government for study purposes. So I've never got one, but I'm pretty sure, I don't know if it's interest-free loan that the student gets. If it's not interest-free, it's a very low interest rate. And basically they don't actually have to pay any of that money back for the loan towards your education until they start earning a certain amount of money. Now, I couldn't tell you the amount. It might be like 55 grand or something. So what happens is, put in context, let's just say I've taken on a mature age apprentice. He's already gone, he's done an architecture degree, and he's been in the office and realised, guess what, I want to be more hands-on. And he then comes and basically starts working for me. So I've got here that it is interest-free, but it has a 4% of index. So that's what one of the guys has typed in there to me. All right, so sorry, back to what I was saying. So you've got this mature age apprentice that's working for me, and if he then earns that threshold, I've actually got to withhold money from his pay to pay back the loan. So just like how I take out tax for him and I pay that to the ATO, I've also got to take out a certain amount of money to pay back his higher education loan. So that'll be just something, when you sign up an employee and you go through getting their tax file number and all these different things, one of them basically says on there, do you have a higher education loan? And that's when they've got to say yes or no. And obviously if he then lies about it and says, no, I don't, well then how are you to know that he's got an architectural degree? But when he says yes, he does, then that's just something extra within your business that you guys need to be aware of, that you need to deduct and then basically pay to the ATO. All right, so what is an input tax credit? So this has now got to do with, we're doing a basically our BAS statement. So anyone registered for GST, and we'll talk about how much you've got to earn a little bit later on, because that's one thing you definitely want to know. Anyone registered for GST can claim the GST that they've paid against the GST that's owed. So I'll probably get this around the wrong way. The last time I taught it, I did. I know how to do it. I just, all the GSTs and it talks about paid and claimed, I got it mixed up. So I'll see how I go this time. So for example, if the business has collected $6,000 in GST, so I've gone and built a deck and I've claimed $6,000 worth of GST. So that's from my client. And I've paid out $1,500 in GST. So that might be, I've added up all my invoices that I've paid for petrol, nails and timber and so on, and I've actually paid out $1,500, then the GST that's payable will be $4,500. So that's basically what I owe the ATO. So I've been paid from my, collected from my customers $6,000, but I've paid all my suppliers and everybody else. It's $1,500 in GST. It's not $1,500 total, $1,500 in GST. So minus one from the other, and that's how we come to $4,500, and that's basically what I pay the ATO. So has anyone here not actually done a BAS statement before? Just that if you're not clear about it, I can talk about it at the end. But obviously, if we're doing BAS statements, yeah, then we can just move on. But I don't want someone to go, geez, I've never done one, and in a couple of months I will, and I've got no idea. So if you haven't, let me know, and I can probably give you some information on how to do it. All right, so this is the big one, guys. If you don't know this, all right, cool. No worries. If you want to have a chat about that a little bit later, we can do that at the end if you like. All right, so this is one thing that we all want to know. So definitely highlight this, write it on the inside or cover one of your books or something if you don't think you're going to remember it. So at what dollar value, so this is gross amount, must your business be registered for GST? So from July 2007, businesses with a GST turnover of less than $75,000 are no longer required to be registered for GST. So, and that's your gross turnover. So even if you're basically you're in building, and even though you're not making that much net profit where you're paying tax on it, if your turnover is basically $75,000, then you need to be registered for GST. So the PAYG, I don't know why that's got that there when it's talking about it, but anyway, we'll read that because that's talking obviously about being registered for GST, and then it's got a random one there about PAYG. So that's obviously our tax withholding. Is a single integrated system for reporting and paying withholding amounts and tax on business and investment income. The system brings income tax installments and withholding tax obligations together in the one system. So what that's talking about is when we do our BAS, if we've actually got staff and we're withholding their tax, then it's done on our BAS statement. So that's basically what that's getting at there with that second bullet point. All right, so the two elements to the pay-as-you-go installments and pay-as-you-go withholdings. So basically the PAYG, it replaces the provisional tax and installment system under PAYG. So it's pretty much the same thing, just been upgraded. And says our income tax installments are based on current trading or income conditions and paid after the income is earned. So basically, this is what we've earned. Here's basically what I owe in tax. So then this one down here, they've just they're always updating stuff. And if you might be basically familiar, I'm only familiar with these ones here, the PAYG, but it actually did replace, if you've seen these ones before, what they used to call pay-as-you-earn, or the PPS, which is the prescribed payment system, or the reportable payment system. So there were some other ones as well, but they're basically the ones that we use. All right, so businesses that provide goods and services to other businesses will have to quote their ABN or risk a tax rate at 48.5% being withheld from payments made to them. So businesses using a BAS, so your business activity statement, to report all ongoing business tax obligations. And although both PAYG and GST amounts can be recorded on the same BAS, they are distinct taxation requirements. So what I was saying before, when we do our BAS statement, we have one section for the PAYG, for basically the the tax, and then the other one for the GST. So not for the tax, for the like our withholding tax, and then the GST. Basically, they're on the one sheet, but they're two totally different entities. All right, so here's the thing he talks about, can you pay annually? So the annual installment is a lump sum, is a single lump sum payment of your company's PAG liability of the year, and a company is eligible to do that if its most recent national tax was less than $8,000, it is not registered or required to be registered for GST, and it is not part of a consolidated group or participated in a joint venture. So don't worry, you won't have to remember this stuff, guys, for your interview. But basically, the main thing you want to go down here, the ATO will tell you if your company may be eligible to pay annually. If so, the ATO will advise you on how you can elect to do that. So one thing I noticed that when because I went on wages for a couple of years, and then recently I've gone back to probably 12 months ago to basically being on my ABN again, and I did notice on there that I had the option to actually report my GST quarterly but pay it annually. And I don't know, you guys, the way I've got all my sort of business and everything set up is I've got my home loan, and then any money that I have offsets against that and brings down the interest that I have to pay. And so I noticed and thought, well, hang on, if I couldn't tell what my last bad statement was, but let's say round figures, say it was $10,000 I had to pay them. I go, hang on, well, that's better off in my account. At the end of the year, that's $40,000 that's offset against my home loan that I'm not actually paying interest on. So that's one thing too. Have a look at that, guys. And one thing about trying to make the money work for us. So, if it's going to be sitting in your account, it's better in your account than basically the ATO account. So I spoke to my accountant about that and said, look, I've noticed here it says that I can pay annually but report quarterly. Can I do that? And he said, yes, you can. He said, but I'd rather not do it now because this will be the second bad statement for the year and it gets a bit messy from the reporting end. He said, but when we come to the new financial year, by all means, if that's what you want to do, we can set that up. So yeah, just something for you, a bit of your own information that you might be able to do that as well. All right, so we're going to start looking at our profit and loss stuff. And as a lot of this stuff we're doing here isn't so much geared towards your interview and your multiple choice. This we decided to put a bit in because we want to try and obviously give you guys some skills as well. It's not all about get registered, see you later. Go, you've got your license now, see you later. So with some of this stuff we're doing, trying to give you some skills as well. So with our profit and loss statement, this is how we calculate it. We did touch on a little bit before. It's basically your revenue minus your expenses, and that's going to equal your profit. So when the revenue exceeds the expenses, today with simple computer-based accounting systems like Xero, MYOB, QuickBooks, a builder can prepare weekly or monthly, quarterly profit and loss statements. So the profit and loss statement and the balance sheet are the two financial reports that businesses are required to submit annually. And you'll see basically, I find these things not that difficult to actually understand. If you've never seen them, it might seem like we're trying to reinvent the Rubik's Cube, but I think these are really good tools to basically manage the business side of your operation. Me personally, I've always wanted to do as much of my own bookwork as I could, and then that way I was always under the impression that if something sort of wasn't right, I could pick up on it straight away rather than waiting for that monthly report from my bookkeeper or whoever. So that's just me, but some guys, if it's not your skill set, just like we spoke about doing that SWOT analysis, then by all means pass it on. But I've always been a fan of going, well, it's my business. No one's going to have as much invested in it as what I am. So obviously that's one thing I want to really understand. So we'll talk about our balance sheet here, and it'll show us on the next slide. So a balance sheet represents basically a summary of a company's financial position at a specific point in time. And it compromises your assets, your liabilities, and the proprietorship. And then the balance sheet is a snapshot of the company's financial position at a given point in time, usually at the end of the month, because that's when we do our reporting. We pay our invoices, and we can sort of get like a clean, basically snapshot of where it's at. So there could either be the end of the month, let's say the quarter or the financial year. But depending on what you're monitoring, quite often you just might do it at the end of the month. So the following is an example of a balance sheet. So that one there, that's just a pretty basic one really. It's just showing what our debtors are, what our liabilities are, and then what our assets are. So the ones that that would be something that I said I wouldn't do. I'd probably get my accountant to do that for me. But when we get up here, we'll start looking at some cash flows and so on. And they're, I think, really good documents. So here we go. According to the cash flow statement on the next slide, what is the actual profit before tax? Now, when we first look at this, it might seem a little bit confusing. And because it's basically on the PowerPoint, I'll have to make it really big again. So by all means, with this one, if you don't grasp it, don't stress, because I've got an actual proper working one that's in an Excel spreadsheet that I'll bring up a little bit later on. So on here, it's given us the answer. So it's basically saying that those are the figures, but I'll show you how they came to those figures when we turn over the slide. So this here is basically the spreadsheet. So let me just take that out of PowerPoint mode, and I'll try and make that big enough so we can see it. All right, so what we've got here, it's almost like a bank balance sheet, I suppose. So what we've got is at the beginning of July, we had, well, not we, this builder had $38,000 in his bank account. So the income that he's got basically coming in for the month was $30,000. So that could be progress payments. He might have, a side business where he does maintenance or whatever he does. That's his income coming in for the month. So basically when we add those two together, 38,000, that's what we started with, and then the income for the month brings us to $68,000. But then we have to minus all these things here. So this is basically his monthly bills, if you like to put it that way. So what was his labor? What was his subby cost? What was his bookkeeping? And that's basically what we would call his outgoings, and they've all come to $31,590. So what we've got, how am I going to, it doesn't actually show it very well there, but when we've got our $68,000, because that's what we have when we put our basically our starting balance with what our monthly incoming was, we minus our outgoings, and therefore at the end of the month we've now got basically $36,410 in there. So as you can see, we've basically made, what's that, $6,410 for the month. So then basically as we go along, the next month he gets $25,000 coming in, and that's his expenses. So he's had $25,000 coming in, but his outgoings for that month were $29,140. So therefore that month he actually made a loss of $4,140. So therefore his bank balance is now at $32,270, and that's not uncommon to be seeing that, guys. So that's why when we want to have our bank account set up and we're being DBUs, DBMs, whatever, DBLs, we're going to have a lot of bills, and that's why you want to have a little bit of money behind you, because this is not uncommon that this is going to happen. Because as we would have noticed in our last couple of subjects when we did our progress payments, if we're using method A, depending on whether we're building to lock up or the whole build, there's only going to be a handful of progress payments in there. So if that job goes for 5 months, 6 months, it's not uncommon to maybe have a month where you actually don't have a progress payment come in. And so then in that month, we're going to have probably a pretty big negative cash flow position. So that's basically how that spreadsheet looks, and I'll bring one up a little bit later on as well. And so what they were getting at there was just doing some figures and going, okay, well, basically our cash flow here was 87,000 minus what our all our expenses were, and that's how they came to the figure. But don't worry too much, we're not too concerned about that exercise, just more about having a look at this document and going, well, I've never seen one of those before. Maybe you have, and that's something that I could probably, once I've done my estimation. Now I know that there's the reality of how diplomas and Cert 4s are taught to how we do it on site. But the reality of this is, and it's probably more so in a commercial world because their contracts are so much larger and there's so much more involved. But you could see if you were, once you've done your estimation, so I'm not sure how you guys work, but if you were to work out your job and go, okay, this is the cost for that architectural house I'm going to build, I'm going to drop a schedule, and it's going to take me 6 months, you could probably then map where these expenses were coming in and go, okay, so on the first month, I'm going to have my site costs, my preliminaries, blah, 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 and basically forecast what that was to our schedule, what we were going to pay out, and then go, okay, well, actually, it's going to take me this many days, and then I'm actually not going to get that progress payment of the base stage until the next month, and then they've got 7 days to pay it. So you can then forecast, basically what your bills are to what's coming in. Now, I know that this is it's all time consuming. You might go, geez, I haven't got the time to do that. And I'm not saying you should or you shouldn't, it's up to you. But as you can see, by the use of doing something like this, it gives you a much clearer picture of when your money's coming in and basically who you've got to pay. So then you don't go, geez, I can't sleep at the end of the month. I owe, $150,000 and I haven't got anything coming in for, another 4 weeks, because that's the reality of a lot of building businesses. So I think, by doing something like this, if you've got the time, definitely, it can't hurt, and it gives you, we wouldn't basically forecast a job without knowing how we were going to build it. And, most of the time, guys, most of us are, pretty good tradesmen or back ourselves as a tradesman, or otherwise we wouldn't be going for our builder's license. But then this is the stuff that we now need to sort of start understanding to be successful on that end of it as well. All right, as I said, I will basically send this over in an email to anyone who wants to sort of go over these PowerPoints later on. So here's basically just a profit and loss. I'll put this into the large screen again. I'll just make that a little bit bigger. All right, so this was just when we were talking before, very similar to what we spoke about before with our gross profit and net profit and so on. So there's some basically some other ones, as I keep saying, of our overheads, and that we probably don't basically consider all the time when we're doing our estimating. So that was in a previous slide as well, so we can click on past that one. All right, so what are retained earnings, guys? So retained earnings are another way of expressing profits earned and kept or retained in the business to help it grow or consolidate. So an example of that would be a builder who's made $40,000 profit in his second year of trading may keep the profit to buy an excavator rather than continually hiring an excavator. So that's similar to that scenario I was using before when I was talking about hiring scaffolding. So the term retained earnings is usually associated with a large business and is a question that could be asked during an assessment. It means exactly the same as net profit kept in the business. So I don't know if you want to maybe highlight that one in your book or make a note of it, but they might ask you what are retained earnings and how can you use them to make the business grow. All right, so from the business management perspective, if you employ someone on an award, what are your responsibilities? So these are some questions that you're probably going to get thrown at you in your interview. And so Fair Work Australia, that's a government organisation that controls an employee's terms and conditions of the employment. And when it says under the modern award system, if you're not actually familiar with it, when you go there, the award system is basically a document, I suppose, that you download, and they're for different industries. So when you see, like, the hospitality workers are going for, like a wage increase, that's got to do with the award. So that outlines basically, and I'll talk about it later on because I'll miss some of it if I do off the top of my head, but basically what it outlines is, what the pay rates are, basically what their, basically the terms of their condition, basically how long do they work before they get a break, these sorts of things, what tasks are involved. So, what makes someone a chef compared to a cook, and in construction terms, when we're doing carpentry, as it's been a while since I've employed a carpenter on wages, but I know that the last time I looked at it, they had like carpenter like level 1, I think it might have been, say, through to level 7, and that was basically how they justified the pay rate. Because obviously if someone's on there and he's just swinging a hammer, he's got no responsibility, he just, monkey see, monkey do as a chippy, then he's probably going to be on a level 1. But if you've then got someone who's, in charge of maybe supervising the apprentice, doing the site set out, all these sort of, I suppose, leading hand tasks, then if he's on an award, he's going to get a bigger rate. So I know a lot of the time that we employ, most of the time on subcontract rate, and we just basically agree on the rate. You probably have your leading hand on $5 an hour more than the other guys. But if you actually had him on an award, it would outline what his duties were that actually came under that level of pay. So one thing you want to be aware of, and not that you'd go into this much detail, we wouldn't be asked this much detail in your interview, but just for your own benefit, that just be aware of what the employee entitlements are. So some things you might not be aware of if you've got employees, and things like breaks. Now, unless it's changed, I said I haven't employed anyone on a wage for a couple of years, but it used to say that, I think it was, and don't quote me, there's something on the lines of after 4 hours they had to have a 15-minute break, which was basically paid. After 6 hours they got a half-hour lunch break, which was unpaid, and then I think anything after 8 hours they got time and a half or overtime payments. So there's things like that, and I know that when I was on the tools, basically as an apprentice, that we quite often just used to have, like the one break. We'd sort of go through till 11 o'clock, and we wouldn't have morning tea, but we'd have basically a late morning tea, early lunch, and we'd stop for sort of about half an hour or 40 minutes. So something like that, if you've got someone as an employee, I said check the award, don't take it as gospel from me, but I'm pretty sure that that's going to be illegal, because you're not actually giving them their required breaks that they're entitled to. And there's also different things like where there'll be, working at height allowance and things like that. A lot of it's more regulated, I suppose, in the commercial industry because of the unions. But if you were to read the award rate, if you've got an apprentice there, you'd be amazed at some of the things that you would have to pay him that you're probably not. I've got a mate who did his apprenticeship through a group training organisation. And what a group training organisation is basically they own the apprentice, but they hire them out to you for 6 months or 12 months, and they basically look after all the paperwork. Really, that is to invoice you for the apprentice, and that's your obligation. So he did renovation work, and when they used to have to do anything with hazardous materials, like they might be removing some eave sheeting that was was made of asbestos, he would have to log his hours basically for the time frame that he was working with those hazardous materials, and because then he would basically receive a higher pay rate for those 4 hours, whatever it took to actually deal with those hazardous materials. So things like that, just be aware that there are things like that in the award. And I said, not that you'll be asked that in your interview, but the last thing you want to is have an apprentice for 4 years, and then at the end of it realise that you've underpaid him, and then have to back pay that 4 years. That's something that happened to my old man. I might have told you that he owns a hardware store, and he's a bit old school, can't use the internet, and he actually rang Fair Work Australia and said, I've heard that there's an update coming. Can you actually send me, can you fax me over, because he doesn't use email, can you fax me over the new modern award? So they faxed it over to him, and they'd actually faxed him the wrong one. And so he had actually underpaid about 3 of his staff for about 7 months. It wasn't much, it was only, 70 cents an hour or something, but it was his risk. So when he actually found that out, he contacted Fair Work Australia, and they said, well, sorry, the advice you were given was the wrong one, but it's your responsibility to make sure that they now get what they're entitled to. So he had to go and back pay all his employees basically what they were given, or what they should have been given. And I said, and he was trying to do the right thing by going to Fair Work Australia, and they just gave him the wrong document. So it is actually our responsibility. So just make sure that anything in there, you can't just say, oh, sorry, I didn't know that. And it's one thing, if you've ever been on there, guys, I find it really hard to try and find, there's that many modern awards, and depending on which state and also which section of the state you're on and things like that, which part of the state you're living in will determine what award you're on. So it does get quite confusing, I find. So that's why sometimes it's better to give them a ring and just hope they don't email you the wrong one. All right, so this here talks about basically where you go to get it. So your fairwork.gov.au/pay, and that's the one there for the Joinery and Building Trades Award. So it's 2010. So that was the last update. And the following points is that I spoke about some there, about the lunchtime breaks and things like that. But other ones which would be noted in there would be how long the probation period is, what your job description is, what your start date is, what the remuneration is, so how much I'm paying you. So what I used to do with all my employees as well was actually give them a copy of it and say, this is what you've been employed upon, because they all hear something from a mate and think it's gospel. Oh, my mate gets, $25 an hour because he's working on the second story, blah, blah, blah. So say, mate, this is basically what I've employed you on. And basically then that way it takes all the innuendo out of it, and they go, this is what the award is, and that's what I'm paying you. So I always gave everyone basically a copy of that award. All right, so 4 entitlements that an employee must receive. So this might be something you'll get in a multiple choice. So obviously their salary or the wages, so they need to be paid. But you have to obviously get personal leave, annual leave. And if you're not sure what leave loading is, guys, it's not something that I've ever had to pay, but correct me if I'm wrong, basically if you pay someone what basically the award is, you haven't paid them over what the award is. So basically what the minimum is on the award, when they go on leave, you actually have to pay them an extra percentage on top. And this is the part I'm not sure, I think it's 17.5%. So the 4 weeks they go on holidays, you actually pay them 17.5% extra whilst they're on holidays. So that's what the annual leave loading is. So you might actually have to do work cover if you've got employees, and then that compulsory superannuation contribution. So we'll talk about coming up a little bit later on about when we've even got to pay our subcontractors superannuation as well, because super isn't just for basically our employees. And as far as the work cover goes, if anyone hasn't done work cover, basically what happens is when you apply for your work cover policy, it's been a while, so I'm just trying to think off the top of my head. Basically, what I had to outline was the industry I was in, the number of employees that there were, and then also the annual income of all those employees. So what it does, it is an insurance policy, and what it does, it's almost like when you have an insurance on a car. So I'll say to you, okay, what type of car do you drive? And how much is it worth? Because what they're trying to work out is, okay, how many employees have you got? Because obviously the more employees you've got, the greater you probably are at risk of having an accident. If you've got 20 employees compared to 1, well, there's 20 more people who can hurt themselves. And they also want to know basically what the wages are, so then they can sort of get that's how they work out, I suppose, their premium, and they would know, okay, you're in the construction industry. Our history shows us that there's, a high 50% of all claims are back related, and if they're back related, they're off work for 2 weeks. So therefore, to pay someone off work for 2 weeks roughly costs this much, and that's what they want to know, basically what your wages are, so they can obviously work out what your premium and so on will be to try and get an estimation, because it really is an insurance policy. So you can find out stuff like that on here, fairwork.gov.au. All right, so this is where we talk about if someone works for us, are they a subby or are they actually an employee? So I'll read through this scenario. And so if a fireman works for you as a labourer on an hourly rate, when he's not required by the brigade, is he employed or is he a contractor? So the main issue in relation to the above question relates to the legislation known as personal service income. So you can go to the ATO and find it, or you can type in the search engine the 80-20 rule. And so I'll read through this, and this will make a bit more sense. So it's a potent and current issue in both domestic and commercial construction, commonly referred to as the 80-20 rule. It means if you work for the same employer, 80% of the time you are classified as an employee, where that employer has to pay super and work cover on your behalf. So this relates to the genuineness of the employment situation. Most builders will prefer to employ a person on a contract as a contractor, as there are no ongoing entitlements accruing from the contract situation. So put that into context. Okay, I'm the builder. I've got basically 3 guys working for me. They're chippies, and whilst they give me an ABN and invoice every week, I don't pay their holidays, I don't pay their sick pay. But because they're doing more than 80% of their work for me, then realistically they're classified as an employee, and so therefore I've got to pay their super, and they're included under my work cover. So just be aware of that. That'll be something that I think will more than definitely come up in your interview, so just be aware. Yep. And a lot of people say, okay, well, what do I do with my plumbers and my electricians? Well, when you think about it, I know in my experience, the plumbers and electricians basically just come in, they do their rough in, they basically do their fit off or whatever their tasks are, and they move on. They're not doing 80% of their work for us. And and another thing too, I don't want to get too complicated with this, but I know that when I was at Simmons Homes, they were sort of worried about, they saw it as a risk to their business. In the training department, they had about 80 trainers, and they were pretty much training exclusively for the Simmons Builders Academy. So what they actually told them was that anyone who wants to train, part of your agreement is, and they do this with their estimators as well, that you actually have to become a company. So that then got them out of paying the superannuation, and they were just employed on a contract rate because it was a company employing another company. So as I said, don't take my advice and do that and then ring me in 2 years' time and say, hey, I've still got to pay this guy super. But that might be something that if you spoke to your accountant about, because I said, I know that's what Simmons Home did with all their estimators. They pretty much didn't want full-time estimators anymore. They wanted them on a contract rate where they got a percentage of the job that they did, but because obviously they were working full-time for Simmons as a contractor, they made them become companies, and that was to basically, then they didn't have to pay them those entitlements. So yeah, if you think you're in that scenario, it might be worth just investigating just for your behalf. As I said, I wouldn't say that to an interviewer because he'll probably go, what are you talking about? But that's just more one for your own personal development as far as paying your contractors. All right, so what's the difference between a contract of service and a contract of employment? So the contract of service, so that's the employee, is between an employer and an employee and includes the employee's terms and conditions of that employment. So the contract of employment, the subcontractor, means any person of any age employed by an employer to do any day work for hire or reward under contract services. So independent contractor is an individual organisation that supplies labour services through a contract for services, and the individuals are involved are not employees of any other organisation or self-employed. One thing I didn't cover before, guys, that I wanted to, was when we were talking about work cover. Now, in 80-20, oh yes, what does a 20 mean? Sorry, that was a good question, Valavan. Valavan just said to me, in the 80-20 rule, what does a 20 mean? So it basically means they're doing 80% of their work for us and 20% for somebody else. So that's then when they become basically classified as an employee to get all those benefits. So that's basically 80%. If they're doing basically above 80, then they're still obviously classified. So if they're doing 80% or beyond, then yeah, they come under basically get the same benefits. Not all the same, because they don't obviously get holidays and so on, but they get that work cover and superannuation. But yeah, sorry, what I wanted to ask before I got asked that question, not what I asked to tell you, was as far as your work cover goes. So which one's that? Greg, one second, mate. I'm getting a bit getting a lot of questions. I'll come back to that one and I'll have a look. So it was slide number 49. So give me a second. I'll make a note of that and I'll come back to slide number 49. So yeah, what I wanted to say about the work cover, in my experience, I've had a work cover claim, and I'm sure we've all done basically cash jobs. My advice would be to you guys is not to be paying anyone on basically a cash rate. You might have a labourer there and goes, yeah, look, mate, I don't have an ABN. How about you just give me $20 an hour and I'll just work for cash for you? Because what happens is if he has an accident, then yeah, basically you're going to be the one that's in a world of hurt. So even though he doesn't come under your work cover claim, if it gets reported, and we do actually have to report any notifiable incidents on our site, which we'll cover next week, then they find out that you're actually paying in cash, then yeah, I think you're going to be in for a world of hurt, because I doubt that work cover's going to pay his rehab because he's not under your insurance policy. And I would think that then you would maybe be liable for that. So I just know that with a workplace accident that I had, basically someone just cut themselves and had to be reported to work cover because it was a laceration and they couldn't come back to work. And they basically came out and did basically a full investigation. Like, it wasn't anything that they were grilling me, but they went through all the books to make sure, yep, this guy is actually on the books, he's an employee. He was on there on this date and so on. So yeah, definitely if there's going to be a claim, I wouldn't be trying to save myself $5 an hour by paying someone cash, because it's all sweet until basically something goes right. Until something goes wrong. So an independent contract is a written document that sets the contractual arrangements that detail the outcomes to be delivered to that independent contractor. And a contract of employment is a simple common law employment agreement where there's no award, no Australian workplace agreement and no collective agreement. So that contract of employment could still include the probationary period, the position, the start date and the remuneration, just like we spoke about on those other ones. All right, so this is another thing too, guys, that we want to basically definitely understand. So make a note of this somewhere where we want to basically not only understand it, but also be able to remember it either in an interview or in a multiple choice. So what are the compulsory insurances that a domestic builder must have before commencing construction work over 16,000? So if you've done this course before, you're probably familiar with these terms, but if you haven't, basically it did actually change the dollar value. So as of the 1st of July in 2014, it was $12,000 and it's now $16,000. So that's basically for our homeowner's warranty insurance. Anything over $16,000 needs to have homeowner's warranty insurance attached to it. So the Building Act 1993, so we did touch on that in the first week. We'll use the Building Act a lot more next week and the week after. So the Building Act 1993 and the Domestic Building Contract Act combine in determining what the compulsory insurances are for a registered builder. So under a major domestic building contract, so it was that master builders contract we did last week. So 1 second, I'll get to that one too, Valavan. The builder assumes a number of insurance responsibilities, some of which are specified in the contract. Before signing the contract, the builder must have arranged the following insurances. So I'll go through this and then I'll come back to it. So we need to have our homeowner's warranty insurance for work over 16 grand. So when we filled out that contract, it would have asked you what your homeowner's warranty insurance details were. Contract works, we'll talk about that one shortly. That's something a lot of guys aren't aware of because they don't have yet. Basically the public liability, so we want to have public liability insurance, and then our workers' compensation if we've got employees basically working for us. So Valavan's asked me a question, basically is 16,000, is it only for Victoria or Australian wide? I can't talk about all the states, but I know it's definitely not Australia wide, because when I was in Queensland it wasn't $16,000. And the thing, I know, just since you've asked about it, if anyone's looking at going in a state, I actually personally like the way that Queensland have theirs set up. What they actually do, the client, you as the builder, don't actually take out homeowner's warranty insurance. The client pays it, and it's a percentage of the building contract. So I think in the Queensland it's over $3,000. No, it's 3,300 is, so 3,300. And so what they actually do, it sort of works the same way, like they still get covered, but what they actually do is that there's a sliding scale, and you open up this PDF off their version of the VBA, and it goes, yep, $300,000 job, therefore the homeowner's warranty insurance, is not making these figures up, is $4,000. So that client actually has to pay the $4,000, and it goes into basically an insurance fund, which is managed by their version of the VBA. So what actually happens is that if there's a claim, then they come to the builder, and like as we spoke about with our claim period, we've got to go back and fix it. But if for some reason we've become insolvent, uncontactable, or we've died, then they would go, hey, this job's only 2 years old, who's now going to basically come and fix it? So they contact basically the Queensland VBA, and they then send out their own basically building or their preferred contractors to actually fix it and pay them out of the pool of money they've collected from all the construction jobs. So that's sort of how they manage up theirs. It's actually not something that the builder takes out on their own. So I didn't want to get into Queensland, just that one of the questions was, is that for Victoria wide? Is that for Victoria only, Australia wide? So yeah, the dollar value does change, and depending on which state you're in depends on whether it's managed by a private insurance company, because when you guys get your homeowner's warranty insurance, you might go through a broker, but it'll still be through QBE who does it. So different states, there's some send it to a private insurance mob and we basically hire it, we get our policy as a builder, and others go, no, we're going to basically manage it as a government department like they do in Queensland. So yeah, if you are looking for basically to get mutual recognition of your license in another state, just make sure you're across how that homeowner's warranty insurance works in that state. All right, and we'll talk about this contract works and liability insurance basically coming up. All right, so this is basically what are some non-compulsory but highly advisable insurances. So some of these we might have already, but this might be something you get just asked in the interview. So basically, you might have your income protection, or slash if you have, your personal accident, if you have an accident, your tools and equipment, and your motor vehicle. And this is the one. This is the contract basically works insurance. So I'll read through this, and hopefully it's not going to be too much of a shock for you guys, but it might be if it's the first time you've done this unit. So recently registered domestic builders are often surprised to find out that in addition to homeowners warranty and public liability insurances, contract works insurance policy needs to be undertaken based on the expected value of the builder's construction in the next 12 months. So for example, a builder projecting to turn over $1 million in the next 12 months would be expected to pay between $3,000 and $4,000 up front, or on a premium funded policy over 8 months. And basically I'll just go through these next slide or two, and then I'll basically explain how that sort of works. So the contract works protects builders on site for every job for material damage, fire theft, storm damage, and third-party liability. And it says, please note, without contract works policy in place, banks will not pay progress payments. So what they're getting at there, like if you think of it from the bank's point of view, you guys have become a registered builder. I've engaged you to build my house, and say it's a $300,000 build. We've got to lock-up stage, and I've paid out $200,000. Well, the bank has, because the bank's basically approved the contract and approved my loan. So the bank's paid you guys $200,000. So what the bank is concerned about, if there's someone lights that place on fire and it burns down, well, the bank has paid you $200,000, and now they've got nothing to show for that $200,000 because the site's been burnt down. So how are you as the builder? Have you got $200,000 sitting in your account to basically get that back up to where we have actually paid you at? And probably the reality is that no. So that's therefore why you need to have contract works insurance, or the banks aren't going to approve the contract. And so because they don't want to give you money, and if something go wrong, and basically you go, okay, well guess what, I can't do that, so now I'm bankrupt. Bad luck, you've lost your 200 grand, and then I've got to engage another builder and start from scratch again. So just be aware that if you're doing stuff for if you're not doing your own development and so on, and you're looking to get the bank and you don't have that money behind you, then you're going to have the contract works have to have it. But then again, you'd be probably mad not to, because the last thing you want to do is get a long way into the build and something go wrong and then have to fund it to get it back up there again. All right, so don't worry too much about this one here, guys. This, I think, starts to get a little bit confusing. This is the last slide. So if your GST turnover is less than 20 million, what are your reporting options? And it says, like we spoke about before, quarterly GST reporting. You can report and pay GST quarterly. If you report and pay quarterly, you have 3 reporting options: to calculate and report the GST quarterly, calculate the GST quarterly and report annually, or pay GST installments quarterly and report annually. But so that was when I was talking to you before about when I did my BAS statement, how I just sort of spoke to my accountant because what was written on my BAS, and really that's the that's the best point to go to, because the last thing you're going to be doing is reporting incorrectly and then having the ATO chasing you as well as subbies trying to get their money. So one thing I just want to show you guys. So sorry if I've bored you to tears. If you've been on the course with me for a while, you know that this is probably the only one where I sort of talk and really lecture the whole session and you don't do much activities. That will change in the coming weeks. But I just don't think personally there's much point in writing all these answers down, just the main ones that we want to have a little bit of a chat about. So what I do want to show you is, and just because of the time restraint, it's 8:30, I don't think we'll actually worry too much about actually doing this. But if you want me to send it over and you'd like to have a crack at this on your own, in your own time, then that's no worries, I can email it over. This is something that basically the resource team in a builder registration basically set up. And if you've done a certificate for a diploma, you might have done something like this. And it was just working out your expense spreadsheet. So what they actually did I'll open it up, sorry it's on my other screen, is basically we've given a scenario that you're a builder and you've got a few projects on the go, and this is going to outline what your money is that's coming in. I'll just make that fractionally bigger. So it outlines your money coming in. So it's obviously you've got project A, B, C, and D. So for project A, you've got a $280,000 contract to build a 3-bedroom residence on client's land commenced in January 2016. So the lockup of the claim of 35% is in July. And so basically it's outlining when our progress payments are coming in. Then you've got project B, which is basically some townhouses. And then we've actually worked out what our expenses are. So it's got our material cost for the project and how that's broken down. And then it's then got what our basically our overheads are. We'll start to talk about our insurances, the rent that we've got, our builder's license fees, and so on. So that basically gives you a scenario, and trying to get you guys to have an understanding that if you wanted to map out your own spreadsheet so you could forecast what your cash flow was going to be. So when you get to here, then there's a spreadsheet, and the answers are actually in it, so you can actually check your own if you like. So when you come into here, this is a spreadsheet we've given you. So if you can, I don't know if you can see it on your screen, but down the bottom, it's basically got a tab down here to put your cash in. It's called cash in. So it's obviously the money coming in. This one here is your expenses. And then down the bottom here, it gives you the answers for the cash in and then the answers for the expenses. So what we'll do is that because this guy, he signed his contract, and this would be something very realistic that you guys could do if you wanted to, like maybe take out that he's got 4 projects on the go at one stage, but it's got here project A and project B. So we've got on here basically starting in July, so the new financial year, he's got a bank balance of $7,500, and he then knows that if he keeps to his schedule, that progress payment of 35% is going to be 98 grand. And he's got another little thing down here, basically some subcontractor revenue. So when you actually read basically the scenario, it talks about how he's got a guy who works for him and does maintenance, and that gives him extra income into his business. So in reality, you guys might not actually have this section in your one, but it's just basically trying to show you there's more ways than one to get income coming in rather than just waiting on progress payments. But yeah, so that's basically why we've got there that it's $100,000 for the month. So then in our next month, we've worked out, okay, basically, and this is basically our cash flow, because when we go to our answers, that'll tell us what our expenses were for our expenses. So what I'm trying to get at here is, if you guys, obviously when we do an estimation, we've got to work out how much it costs, and we'd have to do some form of schedule of how long that's going to take. Even if you went, okay, look, I've done this build before, it's going to take me 5 months. So even if you didn't bother doing like an actual schedule you were going to follow, but you would know in your head roughly, if you've just got it in your head, how long it's going to take it to each stage, and then you can map out where these progress payments are coming from. And then know when you can expect them and sort of go, okay, well, that's why it's really vital that if we say, look, did he probably have some big one here? So on project B, the lockup on that's 238 grand. So you might look at it and go, geez, the last thing I want is not getting that done by December because it's going to go into January, and the guys aren't coming back from January till the 12th of January, and therefore I'll be waiting another 4 weeks for that payment. So that's why you might look at that and go, okay, and if you do commercial work, or even if you don't do commercial, if you've worked somewhere where they do scheduling, quite often you'll hear the term critical path, and that's basically almost like the, what's the word I'm looking for, basically the schedule that's critical that we meet these points, because otherwise if we don't, we're not going to get to lock up, and that goes back, and that's 238 grand that we're waiting on that now we're going to have to wait another 4 weeks to get. And it won't always be 4 weeks, it might only be a week, but yeah, that's why we want to basically try. It's really important that we keep track of our schedule. So then we come over to expenses. As you can see, he's worked out, okay, what his material purchases are, what his subby payments are, and that outlines basically what his cost of goods are. Then he's got his operating expenses, and down here, so he's got his advertising. He might, you might do something where you've got something going. If you look on here, he's got something $250. So maybe he runs newspaper ads. I don't know. And then he's got his rent, and you can see that's a consistent of 2.5 grand of every month. And then he's got his employment expenses, and then basically those are all tallied up, He adds in here his wages, his superannuation, and then his own drawings of what he's paying himself. He's got his work cover broken down to how much it's going to cost him per month. And so that's the sort of thing I said when we're doing our estimating. If you had something like that, and I said, you might go, geez, Adam, I haven't got the time. But if you can even just work out these operating expenses, then you would know, okay, my advertising, my insurance, my rent, and basically what have we got down here, my work cover is basically costing me this much a month. So if that job's going, it's costing me $2,000 a month. So if that job's going for 6 months, I need to add $12,000 to that estimation to make sure that I'm covering these expenses that actually aren't directly related to those plans that I'm looking at. So hopefully that makes a little bit of sense that I've explained it to you. And what I'll do is I'll email this over at the end of the session with basically the answers are on there, and I'll email over the PowerPoint in case you guys want to read over any of those things about what is an asset, what is fixed costs, and so on. But all the answers are in your in the back of the module 2 in your study buddy. But as I said, I know you guys are online and you like to sort of get as much information as you can, so I will actually email that over. As far as next week guys go, we'll actually be on to module 4, and if you're not too sure what that actually covers, it's basically about the building permit process. And so a lot on there about what's a Form 1, what's a Form 2, time frames for a protection works notice and stuff like that. So I actually really enjoy that subject. It's probably something, depending on your role in the industry so far, might not be heavily involved there because we're not registered yet, so we might not be involved in that permit process yet, but some guys might work for a company where you're a site supervisor and you're involved in it. But you'll actually think it's a pretty good subject to actually do. So I know we're finishing a little bit earlier, probably makes up for because I normally go late. So what I'll do, I'll hang around. If you've got any questions, by all means, fire them in the box or talk to me. And as I said, the guys who have emailed me, I know Greg and Subit have. I just haven't had a chance, guys, because I've got my house going on the market tomorrow. I've been pretty busy for about the last 4 days, so I will get to those and answer them. So I might not be able to answer them off the top of my head now. It might be something I've got to research. So anything else, if you want to hang around, ask any questions. If not, hope you enjoyed the presentation. I might go and have a throat lozenge because that's the longest I've talked non-stop for ages. And hang around. You got any questions? I'll take it off recording now too, so that you guys haven't got your questions stuck on YouTube for the next 10 years.